Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is a real estate and healthcare expert, Trisha Talbot. Now, Trisha is a healthcare real estate advisor to both providers and investors alike. She specializes in healthcare real estate investments, advising her clients throughout the sales process with comprehensive strategies on pricing, market fluctuations, and solutions to close the transaction. She helps healthcare provider clients in establishing real estate portfolio strategies aligned with their corporate goals. Together with her team, landlords benefit through stabilizing their property with leasing, then monetizing their asset. And so, guys, with that, it's my honor to welcome our guest for today's show, Trisha Talbot. Trisha, how you doing today?
I'm doing very well, thank you.
Yeah, thanks for joining us here on the show, and excited to have you here, and excited to learn more about you and your business. So maybe if you would take a few minutes, tell our listeners a little bit more about yourself, and fill in some of the gaps of my brief introduction there. Tell us a little bit more about yourself, exactly what it is you do, but maybe back up even before that and tell us how you ultimately found your way into the healthcare arena.
Sure. Well, I started my career in-house at a developer that did only healthcare real estate, medical office buildings. And so I cut my teeth there in the in-house department that did, so they would develop them and lease them up. And then they held them for some point of time, but then ultimately sold them. So I was part of the leasing effort there. So I really learned a lot about the asset class, really from the ground up, starting in leasing and then moving into sales. And then now I can do pretty much any deal that has to do with my focus in healthcare real estate, and advise my clients based on the rent roll, the type of tenants that are in there, the capital improvements that would be made, and whether or not it looks like a good investment going in based on their exit strategy.
Okay. And how long did you work with that development firm before you decided to go out on your own?
I was there for 2 years, and then I went went to third party brokerage, and I've been there now I'm going on 20 years total ish. So I've been doing it for quite some time.
Yeah. So was there a catalyst that ultimately, pushed you into healthcare real estate when you found your grounding there at that with that development group, or was it just by default you ended up there and you ended up loving healthcare real estate?
Well, getting into commercial real estate, I bounced around a little bit, just trying
Okay.
to figure out where exactly I wanted to land. And then I got the opportunity to work in this at this one company, and I really just enjoyed working with the physicians and different healthcare companies. It's a very mission critical, demand driven type of asset class. People need to be there. Right now, it's one of the most resilient coming out of the pandemic, just because doctors need a place to perform procedures and to see patients. And telemedicine, I think it's great. I think it's a great tool, and it will be a great tool. And I can't wait to see how that integrates into healthcare practices. But other than having a couple of telemedicine rooms being built, I'm not sure that it's going to dramatically change the landscape of going to see your doctor, and just because you can't have surgeries virtually. So I do like that there's some purpose behind it. And in general, I think it serves the greater good on a really high level, in the fact that I really do help provide healthcare services to a specific community that is needed.
Mm-hmm. Speaking to the the pandemic, the resiliency of that asset class, was there any period of time? I know that a lot of elective surgeries were canceled and basically put off for sometimes many months, sometimes some areas maybe even close to a year. Was there any part of the industry that was ultimately impacted, or was it more of a short-term little blip before things got back on track?
Well, I think looking back now, 2020 vision, it was a short-term blip that,
Hmm.
luckily a lot of the tenants did qualify for a PPP loan.
Hmm.
So they were able to get through it. And a lot of the landlords really helped educate their tenants on doing that in order to make the payments. A lot of landlords did, you know, what they would do is say, we'll give you 3 months abatement, and then we'll, increase your lease term by X amount depending on the landlord. So, basically it was deferred income for the landlord, but then the landlord ultimately could build value by renegotiating some of the lease terms to even longer than 3 months, depending on the landlord. So there were those opportunities, but at the end of the day, if you own a building and most likely you have debt on it, you still have a debt payment that had to be made. And I think for some that didn't, they don't have a lot of operating capital for some of these unforeseen events. I think there was definitely some panic. My phone rang a lot as to some things. I had deals being transacted that either went away and did eventually, they all did come back, but they went away for a little bit or went on pause while everyone took a deep breath to figure out what was happening. But ultimately, the physicians, their lack of income during those months was, that was a source of panic as well. And I got some calls on that side as a little bit, just as to, what can they do, some advice on that side as well. So I think seeing it now, luckily, where I'm at in Arizona, and for what I heard from various other parts of the country, it was probably about a 6-week break in elective surgeries. And then things started ramping back up again. So it did bounce back, and looking at it now, it was a small blip, but at the time going through it, it was a very long 6 to 8 weeks, where, people didn't know what was happening. So I think, but now it is, the landlords are all thriving. Most of the ones that I've talked to, all the tenants have recovered and they're getting rent payments on time. And a lot of them, like I said, did receive some of the PPP. So everything is doing really well at this time.
Was there any adjustments in pricing? I mean, more so temporarily, but was there any adjustments in pricing to where you saw cap rates, rise for a period of time during COVID when there was a lot of uncertainty? Again, I guess, speaking to those transactions that actually did occur, that actually went through during, I guess you could say, the year of 2020.
Yeah, I mean, there was, so one transaction came back just as it was, no price adjustment, just re-engaged. One, there was a tenant asked for a rent abatement like at the 11th hour right before closing. So that was an interesting couple of 12 hours where ultimately there was a little bit more of, the investor buying it asked for some coverage of the rent for a couple of, he'd already done it for about a month, and I think asked for another month. So there was that sort of negotiation. I will tell you that right now, cap rates for medical office buildings are incredibly aggressive and incredibly low. If you have a decent medical building, 5 years or more left on a weighted average lease term, it is sub 6s in Arizona, sub 5s and 4s in California. I mean, it's the cap rates for medical office, just because people are looking to place their money in a resilient asset class that is unlikely to fluctuate. And a lot of my advice, while it was happening, at the time, we thought it was going to be a quarter or two of COVID. We thought it was going to recover. And then as we got into the summer, we were all, I think, starting to hunker down for about a year of getting out of it or seeing some light at the end of the tunnel. But what I kept saying is, hey, you know what? This cash flow is 10 years. I mean, let's say worst case scenario, we're in this, God forbid, for 3 years. You still have, there's 7 years of cash flow after that. So, with medical office, I knew it would bounce back. And, I thought so going into the summer, I was like, hey, you know what? I think everyone's just going to be buckling down for this year. But if you're looking to invest and it has 10 years of cash flow and it's strong tenants that aren't going to go under, you're playing the long game. So
Hmm.
this COVID, even if it lasts for a year and a half, two, you will weather the storm.
Sure, sure. Does given that these medical assets are trading at just incredibly low cap rates, I feel like that's kind of the story for the majority of commercial assets post COVID. I mean, there's just so much liquidity flowing through the marketplace, and people want security for that liquidity. And given the healthcare field, I mean, is an incredibly secure place to put your capital. Same with like housing, right? Things that are absolutely required, right? We need to have a
Mm-hmm.
roof over our head. With that being said, is that a catalyst for single tenant, call it physician owned properties to consider a sale leaseback type strategy, given that the prices are so high, cap rates are so low that they could find themselves in a incredible liquidity event. Does that create a catalyst, or no? Am I just making this up?
No, you're right. Yeah, no, I've done several sale leasebacks
Okay.
in the course of the past year. As I said, I had two actually during the whole COVID when the COVID initially everything started to close. I had two, and then I've had a few since then as well. And that is the thing. I mean, right now, if you're a healthcare practice and you've got several sites and you want to monetize those assets, I mean, in a sale leaseback transaction, and you've got at least 10 years, if not more. Some investors do want 15 years, but if you've got real estate and you're like, hey, I want to cash out now and just have and pay rent for the next 10 years and get that equity out right now, it is the time to do it.
Is that a service that you offer?
Absolutely.
Connecting investors with physicians that might be a prime candidate for a sale leaseback strategy. I mean, you've got the liquidity on the one side, and the party that wants to play ball, i.e., the physician with the property on the other side. Is that a service that you offer, connecting those two together?
Those opportunities don't even get on the market. So
Yeah,
I get
I
them from the
figured.
physician, and I've got a handful of investors that I know love those,
Yep.
and they perform, and uh, they get it. It goes really quickly.
Sure, I bet. What are some of the cap rates that they trade at here over the last couple ones that you've done here over the last year and a half or so? Are these
It's in the
sale leasebacks?
sixes, in the six range. Yeah.
Got it.
So
It's a great
yeah,
annuity.
those they go fast, and it's strong cash flow. Obviously, the tenants. So if you are if a healthcare company is looking to do that, I mean, there is some skin in the game. You have to sign typically a personal guarantee for the lease, because obviously the cash flow needs to be guaranteed. And you do need to sign at least a 10-year, if not 15, but mostly 10 years. So those are the two things. It's not, the investors aren't just going to say, hey, you're a healthcare company and I'm going to buy you out. There are some strings attached that everyone needs to be aware of and not be surprised.
Got it. There was an episode you did. I think it was episode 27, and I don't recall the gentleman that you interviewed, but the title of that episode was "Happily Investing in Hairy Healthcare Properties," and it caught my attention. So, I think when a lot of folks think of healthcare properties, I think they're probably fairly straightforward, stabilized type of investments. However, that doesn't seem to be the case based on the title of that episode. So speak to me about maybe some of the topics you covered in that episode. That particular individual you interviewed, again, I didn't listen to it, but I kind of looked through the show notes, and it seemed
Yep.
like his specialty was going after those value add, maybe heavier lift type of healthcare projects. Give me an example of what some of those might look like.
Yeah, obviously there's different investors and there's different things that different investors look for. Publicly traded REITs, they need what I would say are quote unquote cleaner properties, in the sense that they have to pay dividends to their shareholders. So they're really looking for core plus cash flowing properties where they don't have to come in and do a lot of work to either lease it up or
Hmm.
really do any capital improvements to the physical property. And then, they go along the spectrum from that to like the one you're talking about, which is a private investor. So he doesn't have a board he has to present to. It's his company, and then he has some business partners. So they can get in and get a property that has some vacancy, maybe has some tenants that might be rolling, that they need to negotiate some leases. Maybe the building isn't operating as efficiently as possible, and there's some opportunity in the operating expenses to get those under control and really efficient and lower than what they are. There is some inefficiency in how some buildings are run versus others, based on a variety of things. But he can go in and look at some of these, put in some, if it needs, for example, the building needs to be painted, or the parking lot needs to be, needs some maintenance, or a couple HVAC units need to be replaced, and then there's a little bit of vacancy, he can go in and really add, he can buy it at a little, off the market price, so that 100% leased is the best building. Now that demands low cap rates, high market prices, and then he can buy it for under the market rate, because there's some things that need to be done to the property, and that's why it's called value add. So he can add the value, and then he sells it for more than what he bought it, plus so his cost basis plus what he put into it to get it to a certain amount, and then typically you can sell it for more.
Mm-hmm. Is there opportunity nowadays in converting, call it retail assets, or maybe even office assets, into healthcare type of properties? I think, it seems that if you live anywhere, throughout America, most folks have probably seen the trend over the last, I guess, decade or two of, things such as office practice, or healthcare practices or dental practices ending up in retail centers, whereas 2 decades ago that just wasn't really the case. So I'm assuming there could be opportunities there of finding a retail center that might not be operating efficiently, might have some vacancies, and converting either a portion or the entirety of it into a healthcare type of project, or even that of office. I feel office. If you'd asked me 8 months ago what office, how that was going to, was it going to be resilient here after this pandemic, post-COVID world, I'm not sure we're there yet to truly understand exactly what the long-term effects are of the pandemic and how it affects, traditional office spaces. But I think that of all these sectors, aside from hospitality, office is probably the one that, looking at like the leasing side, it's probably got more vacancies in majority of markets than that of other asset types. Is there an opportunity there with any distressed assets to, again, convert from its current use to a healthcare type of use? Is that a commonality?
So retail is, I think, easier than office, and
Okay.
and I've done an adaptive reuse, as long as there's parking. So I did an adaptive reuse of Walmart had started kind of more of a neighborhood market concept that didn't succeed. So they did a huge disposition of a ton of assets nationwide, and there was one that one of my clients liked, because they could go in, and they had some back office plus a clinic, and then they had some space to lease. So we did an adaptive reuse of the retail, and it had excellent parking, because Walmart, as you know, always has great parking.
Sure.
So that did, and I do see, because retail, clinics are, and healthcare companies, they are looking to make it as easy as possible, and have for their patients to see them and have visibility. So I do see that retail will, that medical practices will take advantage of some retail properties. It really depends. So it depends on the age of the office building. It depends on if the office building has separately metered electric. It depends typically the parking will be a little bit less, but the biggest thing with converting office to medical is that it has to be bought right, because the plumbing requirements of going in and putting sinks and exam rooms, they basically you'll be able to keep, like, in an office building, you'd be able to keep some common area hallways and bathrooms, and then all the spaces inside would be completely gutted and have to be built out for medical office, which is which is a high TI cost. So if an
Yeah.
investor is looking at, if someone currently has an office building and they're looking to convert it to medical, they just have to make sure that they're capitalized right. And then if an investor is looking to buy an office building and convert it, they have to buy the property and underwrite it really well so that they understand the cost of additional investment that's going to be required in order to convert it.
Got it. Got it. No, I appreciate that. And I had another question regarding the hairy properties, right? The value
Yeah.
add properties I forgot to ask. And so
Yeah. No. No.
I'm gonna back up a little bit.
Yeah.
What would you say are the more common mistakes of how a property ultimately ends up in whether it be poor condition or just maybe some vacancies, or basically it has not been managed appropriately? Okay, let's just keep it simple. It has not been
Yeah.
managed appropriately by its current owner. What are some of the more common mistakes that those owners make that ultimately don't find success, or maybe they had success at one point and ultimately it's gone the opposite direction, to where there's opportunity for a new life to step in and breathe new life into that asset. But what were the main mistakes that prior owner made?
So there's a couple of things. A lot of what I see is, investors, they start hearing, oh, medical office, it gives great returns. Medical office has long-term leases, and all they do is say, okay, I want to get into medical office, without really understanding what it takes, where the lease rates need to be, how you need to manage it from an operating expense standpoint,
Hmm.
as well as, really understanding the property before you buy it, understanding the tenants, knowing, reviewing tenant financials during the due diligence process, making sure they've got really strong financials, that they're going to be able to make that rent payment along with all the other financial obligations that they may have. So I see that landlords get in, for example, if an office landlord's like, hey, I want to go, or an office investor says, hey, I want to start getting into medical office, and they've never owned a medical office property before. um, I think they get in saying, hey, I'm only going to spend 10, $15 on each space in order to improve it when I lease it up to other tenants. And that is the biggest mistake, because typically on a even second generation medical office building, especially right now with construction costs, your starting point
Yeah.
is $50 a square foot in tenant
Hmm.
improvements. Now the tenants that do have higher specialized TIs, they do participate and stuff like that. But then, they get into where they can't fund TIs, therefore they can't make these lease deals. So they don't have tenants paying the rent, and and then they defer maintenance on the building, and it just sort of dominoes from there.
Yeah, spirals downhill from there. Now that makes
Mhm.
sense. You know, most folks always like to talk about they highlight the biggest transactions, the most profitable transactions that they've done, right? And I always like to take the opposite approach. I'm going to ask you if you wouldn't mind sharing details on maybe the most challenging deal that you've been involved in. What were the challenges? What'd you do to overcome them? And then ultimately, what would have been done differently, given the opportunity to do it again? And it could be from the transactional standpoint. It can be working with a client on a development project. It can be any aspect of your business, any of the services you offer. But please share some details and lessons learned of the most challenging deal that you've been involved in.
And I can kind of aggregate a couple because they kind of have the same theme. But so also in the same thing, physicians are always looking for passive income, as they should. They work really hard, and reimbursements are always being challenged to, and getting less and less. And so they're working all day and seeing patients every 15 to 20 minutes, or in procedures. And so, they're really looking for some passive investments. And one of the things they like to do is say, hey, I need to be in this market. I'm going to get a couple of my buddies. We're going to develop a building, and then we'll become our own tenants, and we won't have to, we'll be our own landlords. Um, and if I might, the first question I ask, when someone's going into it, one of these physicians are going into it, do you practice medicine actively right now? Because if you still do, owning your piece of real estate is a completely separate and additional second job that you're going to have to take on,
Hmm.
or you're going to have to hire people, which is, I strongly recommend, because they can be doing like a property manager can be calling and getting quotes from vendors all day, and then just present them with, some options. So if they talk to me going in, I really try to advise them on what is the best way to own the property, and then all the costs involved, and underwrite it so that they can see what exactly that means from a financial standpoint. Typically, on selling it, I get it when, like some in these sale leaseback situations where the physician, so they'll, sometimes there's, let's say, 3 to 5 partners, but one of the physicians is kind of the guy that raises, or gal that raises his or her hand and says, hey, I'm going to manage this pretty much from a day-to-day perspective. And, they might have a handyman, and they have a list of vendors and stuff like that. But by the time they talk to me, they're like, you know what, I want to free up some of my time, and I no longer want to manage this property and be a landlord. I just want to be a tenant. I want to pay rent, um, and do that. So, and some are more sophisticated real estate owners than others, and I get the gambit. But some of the really big things is, operating expenses. Nobody wants to talk about them. They're not sexy. They're not interesting. No one wants to talk about how much it costs to maintain an HVAC system. But I will tell you that there is, operating expenses can kill you, or they can really add value to your building if you can manage them properly. And a lot of these physicians, they just, they send these invoices and they just pay them, of course. But when you really get underneath it, there's a whole lot of ways that you can pay operating expenses. And some of them don't know, like they don't know if it's a triple net or if it's modified gross on a base year. There's all of this stuff going on. And, you really have to get in and dive into the financials of the building and financials of the tenant, because sometimes, and then they're mixed together. So, when working with, taking a physician-owned property to market really takes some time to sort through and make sure that you understand everything about the property, how it operates, and even make suggestions on how to improve it before you take it to market so that they get the highest value. And you're usually doing, what's challenging is you're usually doing that in the morning while they're on the way to clinic, or, in the evening when they're on their way home, or sometimes in the middle of they have a break between a patient. So you have to talk really fast. You have to have really succinct information. You have to have decision points ready for them to go to say yes or no. And, and so that is kind of the challenging part with that.
Yeah, very interesting. I can imagine. So, yeah, you obviously are an expert at handling a multitude of different personalities, especially ones that are incredibly busy and their time is highly demanded. So,
Absolutely, yeah, exactly. And when they're like, "Oh, I have to go and see a patient," I'm like, "Please get off the phone with me and go." Yeah, you can call me back. So.
My wife is in medical software sales, so she ultimately deals with physicians on a regular basis, and I hear the stories firsthand, so I understand quite well.
Exactly. Yeah.
Well,
But
fantastic.
I enjoy working with them. I really like, those are the ones, like, I mean, I've had higher price transactions, but if you're asking the ones that I get the most, that I feel best, it's when I can really help. Like if a physician group comes to me and they're exasperated with an asset, or they're just like, hey, we as a group have decided we've got a couple people doing a couple different things and we really want to monetize this asset. I mean,
Yep.
those are the ones that are incredibly rewarding, because I do feel like I really help them.
Mm-hmm. Yep. No, absolutely. Well, Trisha, I really appreciate your time. Appreciate you coming on here and sharing, insights as to your business, the services that you offer.
Absolutely.
What is the best way for our folks to learn more about you, the services that you offer, to find you, and all the above? We'll definitely put this in the show notes as well, but where can we find you?
Absolutely. So I have my company website, www.docproperties.com. And then my email is ttalbot@docproperties.com. And then my podcast, if anyone wants to take a look at, some of those episodes, some are, really from a lot of people, either investors, lessons learned, or physician owners lessons learned. And that's
Mm-hmm.
at providers, properties, and performance.com. So there's a lot of great stories on there, and I love interviewing people from both sides of that aisle, and it does provide a lot of information if anyone's looking to invest in healthcare real estate.
Yeah, I listened to a few of them. I didn't listen to the Harry Property ones. I'm going to after the show, but I didn't recognize it until we are about to jump on here. But you do a great job, and definitely a lot of very insightful topics that you cover from both sides of the table. Again, a lot of our listeners are investors, and so. But folks, I mean, even if you don't have an interest or you're not currently invested, maybe in the medical office space, I think that you could definitely garner some very positive insights from the different shows and interviews that Trisha has done. So you do a great job. So keep up the good
Thank
work,
you.
Trisha, and thank you for joining us
Thank
here
you.
today. And that's all we have. So thanks, and wishing you all the best in this post-COVID world that we find ourselves in, and wishing you continued resiliency in the healthcare field. And I hope you keep crushing it out there.
Likewise. It's great to meet you. Thank you.
All right, guys, that's all we have for this week's show. And so until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. You guys take care.